Welcome back to Rand on Real Estate. My name is Greg Rand. I'm your host on 77 WABC and WABCRadio.com. We're here talking about building wealth in the American housing market. You know that it's the most prolific wealth-creating vehicle on planet Earth. You know this. Don't let anybody tell you otherwise. And let me show you how professional investors play this market, because it's a lot of fun. It's really cool. It's very creative, very, very entrepreneurial. And I was walking you through this mixing board of real estate wealth that I was talking about, that there are these dials that if you can move each dial up a tiny little bit, you don't have to get a home run on every one of these different facets. So if you buy at the right time, if you buy in a strong place with good future potential, if you buy in a place that has that potential but also is getting smacked around right now by the recession in any particular way, so you can buy under market, a discounted market, if you can then buy a discounted property. Okay, this is a lot of people jump to this one. They say, oh, I want to buy a foreclosure. I want to buy a foreclosure. I can get a $100,000 property for 70 grand. Won't that be great? And then I'll flip it and that'll be wonderful. Well, you're not going to want to flip it because, as we said before, you don't buy low and sell low. You buy low and sell high. You buy that baby, you put a tenant in, you make cash flow along the way, and then you realize major profits as the market revives maybe a decade from now. But this idea of moving each dial, so the discounted property, there are a lot of people out there that look at that as the prime focus, and I actually sort of get away from it, because the truth is that you don't need to. Professional investors do not look for a steal. They look to buy well. Again, nothing has to be a home run. You could buy a property that's in foreclosure from a bank, sure. You could buy a property that's a short sale. You probably heard that term. If you don't know what it means somebody owes more on their mortgage than the property is worth, and they want to sell it, but let's say you owe 150 grand on a house, it's only worth 100 now. Well, the bank has to let you out of that 50 grand or make some kind of negotiation with you to let that last $50,000 that you owe somehow disappear. And when they sell that property as a short sale, the person coming in and buying it may in fact be able to get a pretty decent price. And the reason is the home seller doesn't really care that much what it sells for. They just want to get out. They're not walking away from that closing with a nickel. So they they don't care so much what they're going to sell it for. The bank cares, but the person making the decision for the bank is in like Omaha, Nebraska in a call center, okay? They don't know the market. And so at the end of the day, they're relying on, the free market to work. If your offer comes in and your offer is the best offer at the time, you may very well be able to buy a property that's worth 100 grand for maybe 75 or 80 or 90, and that is good enough, okay? Because you're only trying to move each one of these dials up a little smidge. Buy at a good time, buy in a good place, buy a discounted market, buy a discounted property. And then the big one, increasing value. Professional investors don't just buy and hold. They buy, improve, and hold. And there are four basic categories that they use to try to find ways to increase value. All right. And by the way, I learned this from watching commercial investors, really, really wealthy people that you probably never heard of that are quietly becoming multi-millionaires and more by virtue of applying these standards and these principles to commercial investment. What I've done is boiled them down and applied them to residential real estate, because I'm more excited about everyday people like me and you who want to get wealthy in real estate, can't afford a big, huge strip mall or something like that, but you can't afford to buy a house. And the four ways that people increase value, number one is the obvious one, condition. You buy a piece of junk, okay? You buy something that hasn't been kept up, that's allowed to get dilapidated, hasn't been maintained well, and a lot of professional investors just get really good at working with contractors to very quickly and very efficiently renovate that property, rehab the property. I mentioned Home Investors in the last segment, that national franchise company that I'm becoming friendly with. They're really, really good at buying pieces of junk and turning them into habitable properties that can be rented out easily for a profit. And it's not that complicated. You just decide in advance what the counters are going to be. You do a very, very good job of triaging the property, meaning I need to know if the plumbing's right. I need to know if the electrical's right. I need to know if the windows and the heating systems are right, if the bathrooms and kitchens are right. And I have to be able to evaluate very quickly what is going to be required in terms of dollars and cents to get this thing fixed up. And if a place requires, if you can keep it simple, if you could buy a property for $20,000 less than it's worth because nobody wants it, and it costs only 10 grand to have that be back to what it should be worth again, you just made $10,000. So you bought well, and you managed to, by virtue of improving condition, increase the value of that property. Number two, I already talked about. The REO, the short sale, the situation where the seller is looking to get out and you have an opportunity to be the right buyer at the right time in the right place, and be able to increase the value of the property simply by buying it low. But these are the last two that I like the most. Improvements in tenancy. All right, there are a lot of properties out there that have renters in place that have not seen their rent go up in years. Okay? All it has to be is a nice landlord. Somebody says, oh, they're nice people. I don't want to increase the rent. Well, you know what? I'm a nice guy too, but I'm going to increase that rent because the market calls for it. Rents are going up. You can buy a property that is under market in rent, buy it for what it's worth right now based upon that rental income, and then do a couple of little improvements to the property physically, repaint it, refloor it, put a couple of appliances in, and then tell the tenant, by the way, instead of $1,200 a month, it's going to be $1,500 a month now. And if they don't want to stay, they can go. It's a free country. You'll find somebody else, and you can increase the value simply by getting a higher paying tenant in there. And then finally, and I'm going to go quickly on this one. This is a complicated concept called adaptive reuse. Adaptive reuse means you look at a property and say, what could this property be different than it is right now? We talked in the last segment to a caller, Joe from Orange County, who asked about multifamily properties in Orange County. Is there zoning that allows a multifamily house to get built on that lot? Multifamily houses are going to command more rent per square foot than a single-family house. That is a reuse of that property. Another category, and I've done this myself, you buy a piece of property, a 3-bedroom house that has a den, you convert that den to a 4th bedroom. In most cases, that property is going to be worth more immediately by virtue of you doing nothing more than putting a closet in the den and calling it a bedroom. So I hope you found that valuable. This is Greg Rand. You're listening to Rand on Real Estate on 77 WABC. Come and see me at ownamerica.com. We have a free class called The Art of Real Estate Investing. Free. Go on the website, take the class, contact me. Let's talk. Let's get to know each other. Let me help you create wealth in American real estate and secure your financial future.
And don't forget about your fabulous book, Crash Boom, available everywhere.
Yeah, available everywhere. I've seen it now in the front table at Barnes & Noble. So people are buying this book. You know, Crash Boom, it's all about, we know it's going to get better.
Awesome. Well, this hour was sponsored by Own America, and we thank you for that. We'll be right back after this. Living Better with Laura Smith. Don't go anywhere. Thanks a lot, Greg Rand. You're a genius.